Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the indexes, we're going to take a look at the FANG stocks, we're going to take a look at Microsoft and AMD. Okay, so first up you can see here there's a lot of red tonight. Trump came out with some tariff $100 billion in new tariffs, and so that sent a shockwave into futures trading, and it actually happened after hours, and so there was a lot of selling into the close, and so right now Dow Jones Industrial Average is down, but you could see on the candle forming today, there's a big bounce off of low of day, so it's currently well off the lows. It was well over 300 points down. Same thing with S&P 500. It's down. But it was down much lower. They were down like 1.5% or more, and so they've have been bouncing. Nasdaq's bouncing as well. It's only compared to what it was down before. And then you have VIX is spiking right now. It was well over 5%, and now it's at about 4.5% up on the evening. And so this is indicating a lower open tomorrow. You do have to keep in mind though that tomorrow before the market opens 8:30 Eastern Standard Time, there's going to be the jobs report, and so that's going to have an effect on the market as well. Leading into today's close, we were heading into an uncertain event. We're not sure how the market's going to respond to the data. We don't know what the data what the data is, and then we don't know what the response is going to be to the data. And so basically it's a 50-50 shot when you're holding into an unknown event. You could either be right or you could be wrong. There's no real gray area. And so with the big tariffs now, with the markets being down, getting thrown for a loop. So before we have this huge event, that now we've got this now we have to deal with the tariffs and being down heading into it. If the market reacts positively to the data, like because we had that last report, they said it was the Goldilocks report, and it got coined the Goldilocks report, and the markets ran, and it made, and then before that though, the numbers were really bad, or the numbers were so good that the market said it was bad, and the markets tanked back in February. So what's going to happen this time? So that's what nobody knows. So tomorrow morning is going to be, so now this throws another wrinkle into the loop, because we are already, trying to position ourselves for this upcoming event, and then now we're starting down. It was before it looked like they were getting a little frothy. Many times when you're heading into a big event, many times you'll get selling before the event, and where they're loading up, and then when the event comes, then they rocket. But having a 3-day rally, being up 3 days in a row, and the markets haven't been able to put together a 2-day run in multiple weeks, that just seemed a little frothy. It seemed like they were setting it up for sell the news. But who knows? Tomorrow the jobs report could come out and save the day, and we could do what we did a couple days ago and go from the lows all the way to to the highs, and go from 500 down to 200 up. But if the jobs report is taken negatively, that could just be more fuel for the bear fire that got started overnight here. So tomorrow morning is going to be very important. So I recommend getting up early. So here we have VIX that closed down 5% today, and so it was below the middle Bollinger Band and the 50-day simple moving average. That was a head fake. It was the first time it closed below this level since back here in March, before this uptrend started. It's been in an uptrend, and then so today was telling you, okay, yeah, things are cooling down. It looks like we're getting ready to go, and then boom, here comes the tariffs. And so that's why in this uncertain event, when any kind of tweet or White House policy that can come out at any random time, there's a lot of uncertainty and volatility. And so as volatility was cooling down here, it's turning out, it's looking like tonight it was a head fake. Okay, so that's what it's looking like. It was head faking. And so now what you have to keep an eye on is this 25 level. That's the top of this channel. And so if it broke above 25, that's when it would be a major red flag. Now the big thing is we're heading into earnings, right? We have record earnings coming up next week. And so that's, everybody was thinking this is the run heading into earnings. And so it is, people were thinking this was load the boat time. Here we are at the bottom. Let's all load up. If you checked out my video last night, I did show that even though we did have high volume, on this pullback, it still wasn't as high as the volume on the February drop. You could see down here, and then look at the very low volume down here in the run. See, this was to me, this was a red flag. There was a declining volume pattern for the Dow Jones Industrial Average as it was climbing higher, and so yeah, that just seemed like the buyers were tiring as it was heading higher, and it seemed like today that a lot of the buying that was running it up was retail buying, and so today this is the other head fake, is that the close today was above the middle Bollinger Band. That's currently at 24488 there, or right up here, 24448, and so right now, and after hours trading, when I made these charts, it was trading down here down below EMA's 4 and 8. It was down here in 2417. Right now it's at 24209, and so that puts it right up there, back above EMA 8. And so what you're looking for tomorrow is whether or not it's going to stay above these two levels, above EMA's 4 and EMA 8 on the daily chart. And if it if it can stay above both levels, then that'll keep this new uptrend going. A new uptrend was trying to get, or not a new uptrend, yeah, well, it was trying to get uptrend going with the move above the middle Bollinger Band, but this reversal was starting when there was a close above EMA's 4 and 8. They had been resistance during this entire drop, and so if it can stay above both of those levels, 24240, that'll signal that it's still intact. Now, if it drops below and you see a close below 24175 tomorrow, or it starts trading below 24175, that's going to be a red flag signaling downside risk. And the downside risk is it comes back down and it tests this 200-day simple moving average. There could be another shakeout before earnings. They might want to shake it out one more time and then have earnings get everything cooking again. It's very difficult to read, but the bottom line is you have to follow the charts. And if you look at SPX here, it was heating up as well. To me, the 3-day run, I was very suspect, just because it had been multiple weeks since the last time there was multiple white candles in a row for the S&P 500. As you can see back here, you have to go back here into March. Okay, into the first week of March, and so we had the two white candles, with yesterday's white candle starting off with this 500 points. It was like, not for the S&P, but the Dow was 500 points down. This was a huge low opening, and then it ran all the way up to the top, and so we had the two white candles followed by another white candle today, 3 white candles in a row leading into an event. Tomorrow could be another white candle if the markets like the action, and we reverse off the bottom. If we have another one of these candles where it opens low and then it runs back up to the high, the main levels that you want to watch are EMA's 4 and 8 on this chart. So basically it needs to stay above 2639. If it can stay above 2639, then that's keeping EMA 4 intact and that uptrend still intact. If you see it close back below, that signals that the bears are back in control, and the risk is that it keeps heading lower, and you're looking at another retest of that 200-day simple moving average at 2592. Now, to the upside, the big levels that it has to break is the middle Bollinger Band and the 100-day simple moving average. Once it turns that middle Bollinger Band into support, that's when it can get a new uptrend going. And for the Dow Jones Industrial Average, if it could get another close, let's say tomorrow there's a huge reversal, and it turns out that we have tonight's reversal gets reversed in the morning, and we're swinging back and forth hundreds of points like in a 24-hour period, like it's nothing. And if that happens, then you want to see a close back above the middle Bollinger Band at 2448, and then you have this 100-day simple moving average is the next big level to break at 24736. Okay, so yeah, so the S&P 500, and then let's look at Nasdaq. So Nasdaq had the red flag, and so it did form a black candle today, and so the Nasdaq that can form black candles in an uptrend and keep heading higher. Okay, so it has been able to do that in the past. A black candle, and since this was a small real candle body, it wasn't like a long black candle. So that's because we discussed black candles a lot in the chat, and a black candle forms when the stock or indice in this instance is up on the day, but it closes below the open. And what that's telling us is that the bears were actually were in control, except for there was this lower wick here where they did push it up, but still it closed below the open, and so the bears were still in control into that close, and it closed below the 100-day simple moving average in EMA 13. It needs to break 6624. So if it's trading trading tomorrow above 6624, then that's going to signal that it wants to break out higher. If it fails to do that, then that's going to signal downside risk. Right now, it's trading down here below EMAs 4 and 8. When I made this chart, that's where it was at. And so if 6546 turns into resistance tomorrow, you see it trading below that level. The downside risk is it comes down here and tests that 200-day simple moving average. You know, that's the downside risk is we get one more shakeout, and then boom, what you want to see is that $1 billion in volume. You know, you want to see that you know, back here when they loaded on this February load off this with this big giant candle or lower wick, this was your big signal that okay, yeah, the bounce is in. Huge volume spike, big long lower wick. You know, you know, there wasn't as much conviction, even though it was up there on this spike, on this bounce, as there was the last time. And maybe that's what the you know, maybe that's what the markets need to wash it out and before earnings to push back up. I'm not sure. I'm just throwing out different possibilities of what could happen. But the bottom line is, if it closes back below EMAs 4 and 8, that is going to signal downside risk. Okay, let's look at the Russell 2000. This is ticker symbol IWM, and so it did have a bullish close today above the 50-day simple moving average at 153. It needs to stay above that level. Okay, so if that level turns into resistance, and then tomorrow it's trading back below the 100-day simple moving average, the gold line, and then below EMAs 4, 8, and 13. If you see it trading below 152, that's going to be a red flag. It needs to close above 152 tomorrow. So keep an eye on that with the Russell 2000. Above 152 signals that this new uptrend is, you know, this new reversal is still intact. It's not an uptrend in our definition until it gets above that middle Bollinger Band. Right now, it's just a short cover rally. It's still in the bearish lower Bollinger Band channel. It's in a bearish downtrend. That's the problem with all these charts. This is a downtrend. You know, this is a bearish downtrend. You know, this is trying to get a new uptrend going with the close above the middle Bollinger Band, but it's still a downtrend. And so that it's hard to reverse when you're in a downtrend, and what has to happen is it has to get above the middle Bollinger Band and turn it into support. So if you see that EMAs 4 and 8 and that 152 level turn into resistance, the downside risk is you get another drop down to 147. So above the 50-day simple moving average at 153, if it can close, if you see it close above that middle Bollinger Band at 154, then that's going to be your signal. Okay, yeah, this is really happening. Like over here, when it bounced here, there was multiple white candles in a row, and it got the reversal going after trading below the middle Bollinger Band. And the same thing here, on the big bounce in February, it had the multiple white candles, and then it got above the middle Bollinger Band. Is this the start of another multi-day run? You know, is this going to be the big long run for a couple weeks here, like these last runs, or is it going to stall out here? And so we'll see tomorrow. Okay, so let's look at a couple of individual stocks here. We're going to look at the FANG stocks. Let's look at Facebook. Okay, so Facebook did close up 2.73% today. So that sounds great. But then you look at the candle, and it was a black candle. You know, it hit EMA 13 resistance here at 161.50, and it failed to break, and it pulled back. And so it has to get above that level and above the 300-day simple moving average at 162.90. Those are the big levels to break. If they turn into resistance and it drops back below EMAs 4 and 8, right now it was trading down here below EMA 4 at 157. If that's resistance, then you're going to see it possibly come back down and test this 150 support zone. And now if it stays above EMAs 4 and 8, that signals this bounce is happening. This was the first close today above EMA 8 since way back here before the drop. So this was a big signal today that, okay, yeah, it's heating up, but it wasn't. So there was some red flags. Is that the black candle is a major red flag, and then I didn't do the intraday charts, but the 15-minute chart, you know, a lot of them were showing this consolidation, and they were struggling with some moving averages. Except for this one, Facebook did get above that 300 simple moving average, but notice that this is, you know, the volume isn't as big today on the pullback. So the bottom line, above EMAs 4 and 8 signals more upside, but has to get above 163. If it drops below that 157 level tomorrow, you see it trading below 157, that's going to be your big signal of downside risk. Okay, let's look at Apple here. So it closed up fractionally today. It formed an indecision candle. So you have this this gap up open with the spinning top here, and so you know, about a spinning top. The lower wick isn't that long, but it's the same type of signal. So if you have a red candle tomorrow, that you know, that could form a bearish reversal pattern. You know, that could be the evening star. The bottom line is it hit that middle Bollinger Band there at 173.21. Okay, so that it needed to close above. Failing to close above after trading intraday, what was a red flag. You know, it signaled it would have been much more bullish if it closed above. That's what it did back here in February when it tested the middle Bollinger Band. It closed above and that signaled more upside. Trading above and then pulling back below, that was signaling caution. You know, they were cautious. And yeah, if you look over here at the volume when it was pushing on this last run, okay, so you could see the, so you know it had much more volume, you know, on that candle, and then this candle here, you know, you could see the volume when it broke the middle Bollinger Band back in February. Look at how much more volume there was. It was what, 50 million, and today there's half that volume, 26 million. So it wasn't, you know, people weren't loading the boat to like to run this today, and so like they were on the February, you know. So we're always looking at the volume. Look how much lighter the volume is here for Apple compared to the February run. I mean, look at this volume down here at 40 million, and then when it was in February and everybody was loading, you know, it hit up here near 90 million. So yeah, the volume, the light volume trying to head higher is a red flag. So right now it's trading down here. It's down here below 170. That was the close, and it's below EMA's 4 and 8 on the close today and after hours trading. And so if they turn into resistance, notice there's the 100, the 50-day simple moving averages, and EMA's 4, 8, and 13 all converge between 170 and 172. If you see it trading below 170, that's going to be your major red flag. It could possibly come down and test that 200-day simple moving average support zone. At least that 165 level would be back on deck. To the upside, if it can stay above these levels, if you see it trading above 172, that would be bullish, and it has to close above 173.21 there, that middle Bollinger Band, to get the new uptrend going. Okay, let's look at Amazon. So Amazon was trying to get the reversal going. So there is it did have the gap up open today. You could see here there's an unfilled gap between low of day today and high of day yesterday. Right now the trading is below EMA 4. It closed below that level. And so if Amazon or any of these other stocks close below EMA 4, it's a clear signal that the bears are still in control and more downside risk. Holding anything in a long position that closes below EMA 4 on the daily chart is always a risk to hold long. And so it go to the upside if it can get back above EMA 8 at 1446, and then get above this 50-day simple moving average at 1476, then it could get moving. If these levels with EMA 13 remain resistance and you know drops back below, you're going to see a possible retest of this 1360 zone. That lower Bollinger Band's down there at 1372. Okay, let's look at Netflix. So Netflix is another, you know, it has formed what I would call an indecision candle. You know, it has the spinning top. Okay, very small. It was almost a doji. You know, the open was near the close today. The close and the open were near the same level. You know, even though it ran up to here and ran down to there, it pretty much finished where it started. And so that just signals a lot of indecision. The bulls and the bears were both at a stalemate into the close, and so it could go either way. Well, right now we've got the gap down. You know, in after hours trading, it's trading down here where the circle is. It's below 285, and so that's gonna you know signal downside risk if EMA 4 at 290 turns into resistance. You know, if it gets back below that 50-day simple moving average at 290, and 290 fails to stay support, that's going to be a major red flag. You know, the next big support levels down here, you know, the next big moving average support levels at the 100-day simple moving average at 244. You know, you've got a big support level at 250. You know, you could see this zone possibly tested if the downtrend continued. Now, record earnings are coming, and this could totally reverse, and tonight could just be a big head fake, and you know, we could be up 500 points tomorrow. Who knows the way the market's been trading. So if it does break out above EMA 13 at 297, what you're looking for is a break back above the middle Bollinger Band at 307. If it can turn that level into support, it can get a new uptrend going. As long as the middle Bollinger Band's resistance, it's still in a bearish downtrend. Okay, let's look at Google. So Google closed up fractionally as well. As you can see, it did form a larger black candle, and that is a red flag. You know, it hit EMA 13, and so what we do too is we when you're trading a sector, you want to compare and see what the other stocks in the sector are doing, especially if you're you know, with the program trades and the algorithms in control. Many stocks trade the same, and so if you start seeing the black candle forming across the board, that's your signal. Oh yeah, they're locking them in. Everybody's taking their profits today. They gapped it up up and then pulled it down. Even though it's up on the day, this is a very bearish candle. And so the bottom line is it's trading now way down here. So it's down below EMA 4. It's below the 200-day simple moving average. You know, the big level to hold now is this 1,000 level. If it drops below 1,000, then that 300-day simple moving average at 981 will be on deck. You know, it got near that level on this lower wick. So that this is going to be the big, you know, you can't see it on this chart, but it's just below down, you know, down here would be the next target if that 200-day simple moving average turns back into resistance. Okay, and then to the upside, let's say it's a big head fake tomorrow, and boom, we're off to the races, and we're running. It's like the Goldilocks report. Everybody's like, man, this is like that magical report. Like, you can't even believe how good this report was, because that's how they were acting the last time. It was like, oh my God, this is the best report ever. We're running like 1,000 points today. So if that happens, then you're looking for a break above EMA 13 at 1045, and then you know, way up here at the middle Bollinger Band at 1079 is the next big level. So that's a big, you know, it would be a big run if it could get past EMA 13. That they held it back below, because if it breaks above, that should be a clear signal that, yeah, this is showtime. It's ready to head back up to that 1080 level. Okay, if the EMA 13 remains resistance, that will signal downside risk. Okay, let's look at Microsoft here. So Microsoft was up really nicely yesterday. It was one of the largest gainers for the technology sector. You know, it was you know, for the Nasdaq, as you can see here. Today though, it closed flat. It closed almost equal to the open. You can see here a doji form today, and it did form a bearish doji star reversal pattern. And so you know, there was a gap up open, a small gap up open, and that does set up potential for a pullback. And so that doji forming after a multi-day run right at the middle Bollinger Band, and then you know, that is a signal that it could take a breather, and you know, that is why that's why we attacked with some puts today, and that's why I was thinking that it was a good put setup, is just because of the candlestick pattern. It pulled back, and then that 15-minute chart topped out. It was looking like a good attack, and so yeah. So and I rode the calls down here. I loaded down here on calls, and yeah, we loaded the calls, rode them up, and then you know, sold the calls, and then you know, got the puts. You know, that's how you play the game, right? You got, especially with all this volatile swings. You know, this isn't about long-term investing for us in this video, for the people. I mean, it could be for people who are watching. I have no idea if you're a long-term investor. That's totally cool. But what we're doing is short-term trading, and so we're just playing the swings, and we're looking just to you know, how we can make profit on a daily basis. And so with this bearish doji star setup, it was a good setup if it was to you know, pull back. Now it was risky as well, because you have the middle Bollinger Band and the 50-day simple moving average here at 92, and it closed above both levels. And so if it gets above those levels tomorrow, we'll have to you know, exit that really quickly, because that would be a signal that it wants to head higher. The 15-minute chart broke down. It was breaking down, and then it heated back up, and it was just a signal that there was a lot of indecision. You know, when I see a doji form after a multi-day run, it is a signal of a temporary top. And I did post in our chat at around 8 a.m. That this had 8 a.m. Pacific Standard Time, that this had set up this bearish reversal pattern. So everybody was alerted early in our chat. So I recommend you coming and checking that out. Right now it is down here at 90.76 or so in after hours trading. And so if this EMA 8 turns into resistance, then you're going to see a possible retest of the 100-day simple moving average at 88. Now if you know, it gets back below those levels, that's going to signal more that it's not ready to go. Okay, so it looked like it was heating up and it was getting ready to go, and it pushed up here into this back to this middle Bollinger Band. But as you can see, it failed to turn that level into support back here on the 26 and pulled back. Well, today, if it's, you know, does gap down and it fails to get back above that level, then that's going to be you know, just signal that this downtrend is intact. So it has this, you can see it has this downtrend going. You know, so it's in a bearish channel, and it has to break that middle Bollinger Band currently at 92.35 to get a new uptrend going. Okay, and then notice the declining volume pattern. That's always you know, in my mind, that's a red flag. If the share price is rising and the volume is declining, many times that's a signal the buyers are tiring. Okay, so if you look at AMD here, okay, this closed up 2.5%. So the semiconductors were under attack, and you know, MU got that, Micron got that downgrade, and you know, across the, you know, Nvidia was under attack. Like just across the board, there was you know, Intel did have an update. There was a couple that had an update, but AMD was one that had an update, had an analyst upgrade today, and you know, so it popped on that news. It had this unfilled gap here, so you can see there's a gap between low of day today and high of day yesterday, and so that gap created a target to shoot for to the downside. You know, being in a bearish downtrend here and having the semiconductors under major bear raid right now, and just being actually it was just they were just telling people to sell. I know they told people to buy AMD, all right, because Barron's came out with the analyst buy rating today, but as you can see here, there wasn't very much volume, so it wasn't like they loaded the boat on the Barron news, right? There wasn't giant volume spikes. I mean, the bottom line is it could push higher from here if it can get back above EMA's 4 and 8. If it can stay above EMA 8 at 10, then that would be your signal. Okay, yeah, it wants to head higher, and then you're looking at a break above EMA 13 at 1029. If it stays below, right now it's trading down here where the circle is, and so if it you know, at 976, if it remains below that EMA 4 at 986 tomorrow, that's going to signal downside risk, and it could drop down and test that lower Bollinger Band. Notice how all of these candles here are riding the lower Bollinger Band, right? And so once it gets back, if it does get back below EMA 4, then that would signal continuation of the downtrend. So right now it's trying to reverse. Today was the first close above EMA 4 since way back here, right? Since the last time it was in this, you know, since above this middle Bollinger Band, and so that, you know, it was signaling a possible reversal, but it was not a strong candle. Forming a doji on you know, to my mind, this is a doji. It's close enough on a bounce day with light, you know, not heavy volume. It just seemed like it wasn't a very convincing. It wasn't very convincing. And then having the whole sector under attack, it seemed like an easy target to buy puts. And so yeah, the $10 strike puts are so they're in the money. Yeah. So this is look then tomorrow for a possible. You know, who knows how this is going to play out, but look for a possible gap down open tomorrow. Look for, you know, it depends on how the jobs report goes. If they like the jobs report, maybe that could be the silver lining that saves the day. If the jobs report comes across as negative, then that could throw fuel on the fire, and you could see more downside risk. And especially since tomorrow's options expiration Friday for weekly options, there is a you know, so you're going to have people trying to get out of those calls. If they're underwater. Okay, yeah, so thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, come check out our chat. You know, we're doing the, you know, we're talking a lot about options. If you want to learn more about options trading, come check out the chat. I'll post the link below the YouTube video. Thank you.